biggest expense of all of our lifetimes is not rent, it's not a mortgage, it's not a car payment, it's actually the government, okay? And when you start to understand what the government costs, right? Well, not even just taxes, also inflation, which is the hidden tax, right? When you start to understand the power of the BRRRR method and the fact that we're a debt-based economy, like I tell people all the time, men lie, women lie, numbers don't.
Welcome back to another episode of The Pursuit of Purpose. My name is Chris Kiefer, and today I am here with the one and only Michael Ketchen, who is a real estate investor and the founder of the Commonwealth Collective. Today, we're going to be diving into all things real estate investing, but in particular, the BRRRR method, which some of you seasoned investors might recognize as the buy, rehab, rent, refinance, and repeat method. So Michael's done a lot in that world. But yeah, that's what we're going to be talking about today. And without further ado, Michael, thank you so much for coming on to chat today.
Hey, thanks for having me, Chris. I'm excited to be here.
So I always think it's funny, just paths crossing and whatnot. We're over here in Coeur d'Alene, Idaho. You are a part of a Brandon Turner mastermind group called The 50 with a good friend of mine, Anthony Walker. And our paths crossed because you guys were flying into town and you needed a really sweet ride. So you borrowed the Cybertruck for a couple days to have everyone point at you as you drive down the road.
Yeah.
And it evokes a response. I tell everybody, I don't know if there's any other car ever that gets either extreme excitement or extreme hatred just by the nature of itself. So you have to be prepared for sure.
And a quick story on that. So what I did after that, because I was on the fence of something. So I just had come from the 50 event where Dan Martell was talking, and Dan Martell, Buy Back Your Time, great author. And he talks about, his orange McLaren theory, right? The car that he waited to do it. And he couldn't believe the doors had opened when he got it. Oh, these fall allergies. I apologize. Couldn't believe the amount of attention it gets. So I'm out there. I get the Cybertruck from you for a couple of days, and everyone's coming up. My wife's in the car. They're taking photos. They're talking. And light bulb goes off. So I get back. I trade in my Mercedes S-Class. Beautiful car. I love it. I'm not even a car guy. But I go and get a Maserati Gran Turismo. The amount of attention that has already started to get. And now what I'm trying to do is I'm actually trying to get a Cybertruck as well for the winter. Because the doors and the networking, and it's like a business asset. And I was like, man, this guy Chris is onto something. Because forget the car. It's a networking device, which is what we're all in these relationship building. So shout out to you and giving me that idea. And that was awesome those couple of days in Coeur d'Alene to get to enjoy it.
It seriously is. I haven't heard the orange McLaren thing, but is that basically Dan saying that people just stop you and they want to talk to you and who are you?
Clubs and the ways you're around. Like my Maserati, again, it's funny. I get all these guys they want to race everything. And I am like, again, I was driving the Mercedes S-Class, like a bus on wheels. I'm not this aggressive driver. But staying with that, the amount of attention I'm now getting with the Maserati, which, funny enough, it costs less than the Mercedes S-Class, but the Mercedes, it's more of a dad card, This thing, I get people stopping, I get people talking, and it just got my wheels going again as another networking tool, right? I'm in real estate. We raise money. We're getting capital. We're getting deals. We're getting in these rooms. It kind of goes into that. And that's what I saw with the Cybertruck, where I was like, hate it, love it. People are going to talk about it one way or the other. And it's going to get those eyes. So little story aside, remember, you're always being marketed. You're always selling. And even if something like your vehicle, you really kind of flipped it to an opportunity to make some intros like we did and some business and also some attention. So I thought it was a pretty cool story.
Yeah, that's awesome. We could talk about the Cybertruck all day long, but we want to talk about real estate.
Yes.
So the BRRRR method, and I guess I would say I'm open to. I love quick backstory, but my personal opinion is, whatever. They can listen to your backstory on your own podcast or somewhere else. So you can give a 60-second synopsis or say, hey, check out this if you want to know more about me. But I want to get into some nuts and bolts and advice that you'd give to people that are either experienced and maybe trying to expand their strategy a little bit, or someone that's new that is tell me about this. So yeah, give us the 60-second bio and then let's dive in.
Yeah. And I think that's a perfect segue into the power of real estate. So I was a teacher who became an administrator who was running a very tough high school. We turned around the school and then I was ready to do something else because I was burnt out. My wife was commuting to a long job into Boston from Southern New Hampshire. She was ready to do something else. We thought we were going to flip a house. Fast forward 7 years later, and we've got $100 million real estate portfolio with $0 of our own capital, using pretty much the BRRRR method exclusively.
So that's a fantastic. First of all, I have to say, and like timelines are so valuable to me. When I, 10 years ago, I was 24, and I'm the guy that's like, oh, I got time, and now I'm in my 30s, and life's good. I'm grateful. I'm not trying to like bypass time, but I feel like there's this pressure of like you got to get stuff figured out quickly. But how old were you when you made the pivot from education to real estate? When was that first house purchased?
I was about 33, it was about 8 years ago, 32, 33.
Yeah.
And literally, that story is a perfect example of the BRRRR method and the power. And I guess I'll take a step back, and I'll say this about the BRRRR method. And I think this is very important for anyone who's a seasoned investor or just getting into real estate. And I didn't know this at the time, and I've come to know this. I don't think they get talked about enough. The biggest expense of all of our lifetimes is not rent, it's not a mortgage, it's not a car payment, it's actually the government. Okay. And
Taxes.
when you start to understand what the government costs, right? Well, not even just taxes, also inflation, which is the hidden tax, right?
Uh,
When you start to understand the power of the BRRRR method and the fact that we're a debt-based economy, and like I tell people all the time, men lie, women lie, numbers don't. And this is like, why, I pay down. I was coaching a guy today. He's got a 3% mortgage. I find out he's paying $200 extra a month on his rental. And I go, what are you doing? He goes, well, I'm paying it down. I go, your interest rate is 3%. You're beating inflation by not doing, like, what are you doing? Right? Base level understanding. So what the BRRRR method does is it creates velocity of money, and it offsets that big expense, taxes, inflation. I bring all that up to say that when we got started, I didn't know what the fuck the BRRRR method was. I had never heard of it. No idea. I started listening on a podcast. These guys keep saying it, and shout out to Brandon, who I'm in the 50 with. Didn't know him at the time, know him now. I'm like, they just don't sound that smart. This doesn't sound that hard. I actually thought it was kind of a scammy thing, right? But we said we're going to flip a house. So we find this amazing house on Craigslist. Never been to this town before, Kennebunkport, Maine, still own it to this day. But I had gone to college with a girl who lived in Kennebunk. And I remember her saying, like, this is a rich area. I'm like, all right, well, I'll go up there. So me and my wife, Hannah, and my business partner, Matt, the three of us are the owners. We drive in a snowstorm to this house on Craigslist. How sketchy is this looking back? And we find this 4,000 square foot monstrosity in downtown Kennebunkport that was just being abandoned, that was for sale. Looking back, it's insane. For $300,000 on Craigslist. We had no idea what we were doing. We thought we'd figured out, which we did. But it was a steal of a lifetime, and it set us up, and we still own it to this day. But the BRRRR method, I started hearing about this. We thought we were going to buy the house to flip it. They say this BRRRR method, BRRRR method, BRRRR method. We called over 100 lenders to finally find somebody that would do the BRRRR method. Well, the problem was we didn't even know it was called the cash out refi. We kept saying the BRRRR method. Remember, we're just starting real estate. And it was life-changing in the sense that we bought the house for $300,000. Now, this is 2017, so Airbnb is still relatively new. And we weren't sure even what Airbnb was, but we found a lender that would count future vacation booking income, as they called it at the time, or we now know it as short-term rental income. And in 4 months, we rehabbed the house. We got it on Airbnb. We had bought it for $300,000. It then appraised for about $800,000. And we got to keep the house, and we got a check back for about 170-ish grand. I don't remember now. More money than I'd ever seen in my life at that point. But the biggest thing was, I went, wait a minute. We get to keep the house and rent it, and I've got this money, and I don't owe taxes on this money because it's debt. Ding, 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 ding. Light bulb gets going. And that is the BRRRR method on a really high level in a nutshell, going fast. We made double what my school salary was at the time, tax-free, in 4 months. And I looked at Matt and Hannah, and I said, this is what we're doing from now on. And we've added a couple zeros and a lot more headaches since then, but here we are.
That's awesome. So it seems like the hardest part of this, or like I always think about the question, this is a Dan Martell question, but what has to be true in order for this to work?
That's an excellent question. And again, I'm not that smart. Chris, I promise you, you're much smarter than I am with all your fancy tech and everything. So I keep it really simple. We came up with a buy box that has kind of protected us, right? We will only do deals that can be BRRRR'd, if you will, or refi roll, cash out refi, whatever it is. And the way we do it is, and this is something that's killed me over the last 2 years, because if I hear one more Instagram fucking guru say the BRRRR method is dead, I'm going to have an aneurysm. They weren't buying BRRRR deals to begin with, right? During COVID, when money was cheap and money, rates were way down, you could buy something, paint it, refi it, and the rate was cheap. And they said I did a BRRRR. Well, no, what you bought was a discounted treasury. You didn't really buy a deal, right? What we do, any deal we buy, we have to be able to increase the value by usually at least 40 to 50%, right? So on the residential side, you're tied to comps. On the commercial, meaning 5+ units, it's driven by net operating income, or NOI, as we say in the industry. And then what we do, we look at the purchase price. We look at the money it is going to cost to get that building improved, whether that's management, rehab, whatever it is, a combination. We then look at that total amount as our cash out refi amount. And then when we do a cash out refinance loan, we have to be at are you familiar with DSCR, Chris? Debt service coverage ratio?
Mm-hmm.
It is a banking method that I tell everybody to look at, because it's how the world of banking works. What it basically means is, for every dollar of revenue you have coming in, you have to be, the bank wants you to have $1.25 for every dollar in expense you have, the bank wants you to be at $1.25 in revenue, basically. They want to be at a ratio of 1.25 or higher. We will only do deals when we're all in with those numbers like I talked about, where we're at a 1.4 DSCR or higher. And then we stress test that. So we protect, we kind of have the answers to the test going in, right? And what this does is this makes you buy really good deals with really high upside. And everything that doesn't fit that buy box, you put to the side. Because we want to turn back to that second thing I said, that velocity of money. We're trying to get to that infinite return and give our investors back their equity and get our own cash back, etc., as quick as we can using the BRRRR method. So that is the whole fundamental framework. So let's say we're looking at, I looked at a few when I was out there with our good friend Anthony we talked about in Coeur d'Alene. I would BRRRR out short-term rentals in Coeur d'Alene. If I couldn't BRRRR them out, I wouldn't touch them. So it's that same methodology. I have to be able to find a lender for my takeout at my DSCR calculation to know I can get there to get all my money back.
So basically, because I'm not looking at real estate at all, there's the part in my head that's like, these seem like they're just gold mines that like you stumble across and you're like, well, this is a no-brainer, and you just jump on it, right? So to me, I'm like, why is someone else, or why is the person selling it not doing this, or why has someone else not already found it? And is it just because they just don't know? They don't have the strategy?
Well, one, there's a lot of reasons. So one, I like to say that deals are not found, they're made. So I'll give you a perfect example of just some of our recent transactions to show you how they can come from all walks of life. Okay. I'll start small on the residential scale. My latest BRRRR of my short-term rentals was one in Arizona. Okay. I like to be out in Arizona for the winter, so I wanted a place I could have, and I wanted to Airbnb it, and I do big luxury homes, etc. We found a home that the couple was going through a divorce, unfortunately. The husband wanted to save the real estate commission, so he hired his nephew who's never sold real estate. The nephew messes up the listing and forgets to include 1,000 square feet and the casita unit. So he prices it at a 30% discount. So we moved on it aggressively. We bought it for $1.2 million, and then we got them to give us a $65,000 cash credit at closing. So we got that money back to repair the HVAC. And then it appraised for $1.6 million. We did a cash out refinance, and now we have an infinite return on that home. So that home was on the market for everybody to see. But no one took the time to get into the backstory and the weeds and hear what they need and to solve the problem, right? Conversely, last week I closed a $6.1 million apartment building acquisition. The seller has owned it for a long time. He didn't want to push rents that much because his basis was very low. He'd owned it a long time ago. He now needed the cash for development. He went to the broker that I know that he knows. He said, I want a good buyer who can close quick and won't be a headache. So I got that deal through my network and reputation, right? So two opposite ends of the spectrum. Now the broker doesn't know the market the way I do. They thought the rents were only $100 to $200 on the market. The rents are actually $500 on the market. So to give you an idea, back to that start of the question about that BRRRR method and NOI, net operating income, that $300 change is going to account to millions of dollars in valuation on that asset. So there's
because of
opportunities
all
everywhere.
multiplied by every, yeah.
Exactly. So the real quick, we call it the magic formula. I'll give this to some of your audience. This is what makes real estate so powerful. We'll just use a 5% cap rate, meaning the rate of return. Okay. And what the property is valued at. Every dollar of NOI, every dollar of net operating income, if you're using a 5 cap in a market like Coeur d'Alene, for example, a very nice market, is actually worth $20 in valuation. So if you're pushing NOI for every dollar at a 5 cap, you're actually increasing the value of that building by $20. So when you're renting, when your units are $500 below market, I mean, you can do the math. It's a pretty substantial amount of money.
Wow. So to me, it's like, especially because you're not you have to have money to, you have to have lenders to trust and say, okay, we're going to invest this money. What you're saying is that you don't need you don't need $100,000 in your personal bank account to get into this. You just need to do the math, take it to a lender that will lend you the money, buy it, and then you can do the cash out after your rehab and do all that. Is that
Yeah.
right?
And again, like I say in real estate, you're only limited by your creativity, right? And your creativity is driven by you and your effort, right? Now, does having some capital help? Absolutely. If you're in a position where, say you own a company, you want the tax benefits, you want to invest differently, absolutely. And that's why I tell everybody your buy box, everyone's buy box is different. See, our buy box is infinite return. That's our buy box. So we might pass on a deal that might work, say for you, doesn't work for us. We get clear on that. If you're get a good deal though, right, and you're gonna put it together, you have to be willing to give to get. So like one thing we did early on, and people thought we were nuts, and now they say, "Oh my God, that's so smart." But at the time, they all thought we were nuts. We didn't have a lot of money. We needed to raise a couple of bucks. We didn't even know what we were doing. So that first deal that I mentioned earlier, my business partner's parents loaned us 50 grand. They loaned it out at 15%. Pretty good rate of return for them, right? Everyone thought we were nuts. Then when we did the next step, they really thought we were nuts. We did the deal in 4 months. We didn't just give them back 4 months worth of interest. We gave them the entire year's worth of interest in 4 months. So what do you think happened the next time we had a deal?
They were like, "How much do you want?"
Exactly. And we lowered the rate to 11%, right? But they stayed in. They're still an investor with us to this day. See, everyone looks at it, in my opinion, very short-sighted. They go, "Oh, well, I got to get this. I got to get." No. Make it about the people around you. Get the track record. Build up your reputation. Even if on the first few you don't hit a home run, but you make your investors whole, you make your lenders whole, you build a track record, you build a reputation. Lenders will start to work with you. Investors will start to work with you. You got to play a long game, right? You're not trying to get rich on one deal. And we just intrinsically knew provide value to others, and that comes back. I mean, that shows up in my own life all the time to this day, right? Pay it forward, educate, share your knowledge, be part of a community, try to add value. And I really believe that pays off. And it's the same thing with an investment opportunity. Structure it in a way where everybody can win and be happy. It's not always going to happen that way. It's business. But if you go into it with that intention, I really feel like that pays off as you go. And eventually, as you're building that reputation, even if you start small, right? I mean, think about it. You can house hack a single. Coeur d'Alene is a perfect example. There's a housing shortage there, like everywhere else. Rents through the roof, yada yada. Everyone whines, victim mindset, all that bullshit. What no one talks about, what is stopping you from buying a small single family and converting the garage to an ADU? Now that garage unit, if you Airbnb it or you long-term rent it, now you start to build a track record as a real estate investor. You can get into the single family with 3.5%, 5% down, convert the garage to that ADU, refinance, because now you've increased the value of the property because now you've got an extra unit, pull some money back out, and now you're house hacking with an infinite return. Anybody can do that. But instead we whine and we want to Netflix and chill and blame everybody else for everything.
So my wife and I currently we have one rental property, and it was a house we used to live in, and I'm like, and I feel, is this a normal place of just like we're on the fence of not committing to we're going to do real estate for real or not? But it's like the headache of like, it's tempting, I should say, because of just we're running a business to basically be like, we need to just sell this and find a different way to like, use our investments. But then the other part of me is like, I feel like I just need to go all in and go even just like, let's start acquiring a new house every year, or like setting some sort of like next steps. So we've dabbled in it, but like we are not like, I'm not a property manager, although I'm the one managing it. Like it's the last thing I'm thinking about. Like if it burned down, it would probably take me a week to find out. You know what I mean?
So there is multiple things to unpack with what you just said. Okay. And I think I'd ask you the question, ask anybody I coach, anybody I teach, what do you want your life to look like 5 years from now? And we work backwards. And the reason I'll say that is obviously you're a successful guy, getting to know you, everything you're doing. Does your wife work W-2 or anything by any chance? What is she?
She's like I would say 40% of her time's in the same business. She used to be a physical therapist, but
Perfect.
it was just like a volunteer job compared to what we could do on our own.
Perfect. So I'm gonna show you some of the power of real estate right now, right? So technically, neither one of you is a real estate professional, correct?
Mm-hmm.
So right now you're getting mollywopped. Remember what I started the call with, the biggest expense of our lifetime, taxes?
Mm-hmm.
Okay. That single family home, and no one maybe has told you this before, but this is again the type of stuff, the power of real estate stuff you learn. What makes sense in my opinion, and I call it the total return. You could short-term rental that house for 1 year. If you manage it yourself for 1 year, you can do what's called a cost segregation study. Okay. That's going to give you a paper expense of depreciation. You're going to get bonus depreciation. All of that paper expense, right, for your income is going to pass through to your joint return. So now I'm sure you and your wife are paying a good amount in taxes. Is that a fair assessment?
Mm-hmm.
So imagine on that one single family, if for 1 year you could reduce your taxes by 50 to 70%. You think it's worth it now?
Mm.
So it's all about how you're looking at the asset and what you're doing with it to maximize it, right? Another tip, if you own it for 2 years of primary residence, then you sell it, you can shelter certain income on taxes on that side, right? So if you go back to your life, yeah, okay, maybe you want to be a real estate mogul, maybe. But I guess what I would say is a better use of your time, at least from getting to know you, and I tell a lot of people this, if you're just starting out and you're a young kid and you're 21, you're 23, you're 24, you're trying to house hack and get down your cost of living, that's one thing. If you're an established entrepreneur and you've done some businesses, what I usually advise is get the tax benefits, invest with partners and passively, set up your structure and your entity the right way for your individual life, and then double down on what you're focused at, right? Because if you're in the tech space and you can grow that, but you can't ignore the tax game. But you find guys like me, you find operators to partner with who give you those benefits so you can get laser focused on what you're good at, right? That's just usually. But a perfect example is utilizing that single family. Like, are you even optimizing that right for your taxes? Like this is where the education piece comes in. And everybody's situation is different. And that's why I asked that question, what do you want your life to look like? And then you work backwards through design.
Hmm. So that's because I was going to say, I am a firm believer that, like, yes, there's like annoyance is, or like frustration is not the right word, but like for someone like you to say, I'm not even that smart, like that's what every successful person says, and it's like, okay, you weren't, but it takes work and it takes reps and it takes consistency and deal after deal after deal, and now you're pretty freaking smart. But I agree with, you know what I'm saying, and this is true for anybody. Like Dan Martell, I was just listening to him yesterday on a live. He was like, I'm not even that smart. My dad's still surprised with what I've done. It's like, you are smart now. Like, you've got all this years of experience, and that is knowledge, and that's, whatever. But I guess what I'm saying is that I agree that anybody can get into it. But for me, I have these opportunities in business, and I'm like thinking of, I want to buy 4 more businesses. Like, I want to figure out how to leverage the operational, like, efficiency and the tech, and including or incorporating AI and all this stuff. So then I'm like, but that also takes time and knowledge. And if I stop to try and become, what's that?
You just answered your own question.
Well, I guess I'm seeing if you disagree or agree with that, or
no, 100%. Because, and that's what I go back to. Like, you start with building the business around your life and not vice versa. Okay. It doesn't make sense to me if you're a successful tech person who's at a certain level to then go become a real estate investor. That doesn't mean that you don't invest in real estate and get the tax benefits. It just means you move with a different vein. And what I'm a big believer in is mastering one vertical, right? It's the reason that there's 100 different asset classes and ways to make money in real estate. I'm mostly focused on the same 2 to 3, right? And it's because I have the capacity to get really good at master this method, the BRRRR method, like we talked about, right? If you look at it from your lens, okay, I need to get down my taxable income. This is true. I also want to do the business opportunities and the tech and all that. That's also true. So where do they collaborate? and how do you design a plan around that. But your primary focus, in my opinion, should absolutely be, right now you have that first mover advantage. You're early in that space. The upside is much higher. Real estate's always going to be there. The upside is much higher in what you're doing. So you got to go all in. But at the same time, you need more of a burn rate. You need more liquidity. So that's where what you do in the real estate space should be very strategically aligned, in my opinion, to keep as much liquidity in your pocket as possible. Does that make sense?
Mm-hmm. Yeah. Love it.
Yeah. So that's an intentional design.
Yeah. Other thing that I feel like, and this is I'm fascinated by, and I'm curious how your background is affected or brought up by this, but just like when you go talk to aunts and uncles, just like this is where you see like, what's the word? Like what you inherit, and just like culturally, like the privileged and the non-privileged. It's so much is just passed down, like just terrible knowledge from the adult or the parent to the kid. And so like when you ask your aunts and uncles about renting or rental properties and things like that, everyone tells you some horror story, right? And so one way would be to take that advice and be like, yeah, I guess that's a terrible idea, or it's like, go talk to people that are successful in it and find out what they would say, right? I'm curious, did you have any of those things that you overcame, or like bad advice, or like what are the common misconceptions that you hear that you've like rewired or changed your beliefs to be like, that was some bad advice that I really think is dangerous to follow, or whatever? And now a quick word from our sponsor, which is Boolean Review. Boolean is a review software that my wife and I own, and we sell this software to home service businesses. So I know there are many different people that listen to this podcast, but if you know someone, an electrician, an HVAC business, a painting company, maybe a coffee stand, someone that is providing service to customers and get found online by customers, we would love to talk to them. This is a review software that is the highest converting review software in the home service space in particular. And if you're wondering what that means, if you have 100 clients in your business, the typical business gets between 1 to 2% of those customers. So for every 100, they would get one person or two people to leave them a review on Google. Other review softwares get between 3 and 5%, and the Boolean review software gets 20% of your customers to leave you Google reviews. And these are fantastic Google reviews with lots of words, keywords that are going to help with SEO, pictures, stories, the names of your employees. So if you want to learn more, check out booleanreview.com. And now back to the episode.
100%. I've always been kind of stubborn and aggressive, so I've just fortunately born that way. I have a problem with authority, and that showed up throughout my life, which actually ended up being a strength looking back. But no, I come from a single parent household. My mother was always a renter. She had no financial literacy. I mean, you're looking at her retirement plan, right? And God bless her for raising 3 boys by herself. So I didn't have anything to lean into. I will tell you a life event that I think is going to hit my point on the head. I had a friend when I was 21, 22, give me Rich Dad Poor Dad on audio CD. I mean, that's how long ago this was, okay? Fast forward, I was 30. I was getting into this, 31, 32. I listened to it again, and I'm living the life that Robert Kiyosaki's talking about. The difference is when I was 21 and 22, I thought that they were all wrong, but I didn't have real-world experience yet enough. When I was 30, I knew they were all wrong, and I could just lean into it. And what I realized is when you're talking to someone, if they are not living the life or pieces of the life you want, understand it's hard to process, but they're actually just projecting their fear and insecurities onto you. They act like they're giving you advice, but really what they're doing is they're projecting onto you. And even as a young kid, and I've told this story before in another podcast, and I don't know where it came from. I just remember always thinking when I was a kid, and maybe because I had to grow up so fast, I remember thinking, why do adults settle? Like why do they become complacent? Like why? I hate that word so much. This day I hate that word. Why do you become complacent? What is stopping you from doing what you're doing? And fast forward, I live my life for the most part. I get off this call. I'm leaving for Italy again next week, right? I got a house in Arizona. I got a house in Montana. I got a house in South Carolina. You are literally only limited by your vision and how big you dare to dream. And then you put the work in on that roadmap to achieve that vision, right? Once you understand that, I would tell everybody that you mentally have to understand the people that are around you, and they might change as you grow. Their dreams are not your dreams. So why would you let them damper your dreams? But it's so hard to push through, and that's your trust tree, when that's your circle, when those are your people, when those are your day ones. To have the conviction to push back against that is something that you really have to understand. And I think that you have to come to it with the place of, and it's like Dan Martell is a perfect example, talking about his father. His dad's got some deep-rooted issues around money. He's projecting that fear on his son. My mother projects that fear onto me. I've had to show her other ways, and she's still a work in progress. But she went through a lot, right? Best friends. I've now got best friends investing with me, but for a long time, there was fear there, right? When I left education, everyone kept saying, well, what if it doesn't work? What if it doesn't work? I finally said, well, what if it does fucking work, right? My worst case is I go back to my reality today. Your best case is you get to retire at 65. Who gives a shit, right? But it's that you're undoing a muscle that's been built a certain way, that's conditioned a certain way. You've got to learn to retrain the brain and think a little differently.
Love it. Yeah, I think that there's I completely agree. I'm curious, have I know you've invested in coaching, so with Brandon Turner, and you also have a business coach. What else can you speak to around? I guess this is just an assumption that I assume that coaching is instrumental in everybody that's successful. We've invested, my wife and I, heavily in coaches, been in different coaching groups. It's how we met Anthony and a number of other people. But yeah, I'm curious from the coaching perspective, what have been the big unlocks or great investments or things that you would recommend other people consider?
100%. The way I tell everybody is it's how much time and capital you have, and then there's tiers to it, right? Like I spent more last year on education and masterminding groups than I had in the previous 6 years, right?
And you spent money in the previous six.
Yeah.
A
I
lot.
spent money in the previous 6. But where I'm going with this is that catapulted us to another level, but I was also mentally ready for it. So what I try to tell everybody is, let's say you're just starting out. I tell everybody, go to meetups. If there's no meetup in your area, start throwing one, right? You invest in books. You go on YouTube University. That's kind of tier 1 base level. The next tier 2, find meetups and find people and find coaches that are doing what you think you want to do. And that's going to change over time, right? Pay to play. I had one guy, I was in one of his masterminds. He mispriced what he was giving away. And the next year he tripled the price because I think he realized it. And I was telling him about joining Brandon's mastermind, and he goes, we're out at dinner. And I'll never forget this. He goes, I tell him, I go, hey, you should join. This guy's pretty established, a little bit bigger portfolio than mine now, but at the time, significantly bigger. And he goes, I would never do that. Why are you doing that? And I said, hey, why are you sitting right here? And he kind of had that aha moment. See, people get it backwards about education and coaching, in my opinion. They think they're paying for something and they're supposed to get some magical tool, some magical bullet. And I tell this to the people I coach, because I coach as well. No. You're getting control of that person's time. What you do with it, that's on you. So if you want better answers, ask better questions. And if you're not ready for the coach at that level, don't go to that coach. But if you're going to pay for that coach and you show up and you don't get something out of it, that's on you. So understand that you're paying for that amount of time. How are you going to do it? What are you going to do with that amount of time? And then find those levels and work up the ladder. And that's kind of my takeaway.
Mm. Yeah, the idea of, or speak to like the cost of like the entry price, the ticket price to get into these rooms, and how you think about that.
Now, again, if you're just getting started, it's all relative, right? So the way I usually coach people, I say, okay, what do you want? Define your freedom number, right? And for whatever reason, it tends to always be $10,000 a month. I have no idea why, but most people need to get to $10,000 a month to get passive, to be able to leave their job, right? You're making 120K a year, you can get into it. Okay, who's going to get you there, right? So if, say, you're going to be a real estate investor, okay, well, if you're going to start off buying small multifamilies and you can make $300 a door, okay, perfect example. You're going to need about 40 doors. There's a million coaches that you can join a webinar, you can join a mastermind. It's going to be $1,000 to $5,000. Right? You can get in those groups, no problem. You go to free meetups, you can listen to every Bigger Pockets podcast episode, you can figure it out. How quick do you want to accelerate it? Right? Now, if you're someone, say, at your level, and you say, hey, Mike, you know what? I've done well in tech. I love it, but I really want to go into real estate. Okay, we're going to have a completely different conversation. Chris, let's not look at what you don't have. Let's leverage what you do have. You clearly have an amazing way to identify inefficiencies. You obviously have a great network because you come from that tech area. So we're going to partner We're going to have you raise capital. We're going to get into these buildings, these deals. We might talk about syndication right away. We might talk about being a GP LP. We're going to talk about tax strategies. It's high level stuff. Now you might go into a mastermind that is $10,000 to $100,000. But see, you can afford to steal back that time, right? Your pay to play is a lot higher because you're not trying to get to 5 to 10 grand a month passive. You're trying to get to $1 million or more a year right away. So how do we accelerate that learning curve to get you there to take action? So in my point, it's always about what you want and where you're at. And those are the two different things.
Love it. So moving to wrap up questions, so we make sure that we get you out of here on time. Book recommendations. 3 books.
Yes. The first book, obviously, the Bible. I'm sure you get it all the time. Rich Dad, Poor Dad. You just need to have a base level understanding to kind of rethink your brain and the way it works. Again, I can't recommend that book enough. It still holds up forever. The other one's a little, I've never recommended this one before, but I think it's great, especially if people are thinking about real estate. It's a little fiction book that I love called The Honeybee by Jake and Gino. They're big real estate investors. It's a fictional tale about someone who gets very intentional about their purpose, and I thought it was great. And then the book that I recommend all the time that I just don't think it gets enough credit for what it did, and it's all business, is The Millionaire Fastlane by MJ DeMarco. I've probably recommended this on 10 podcasts. It really opened my eyes around thoughts that I had but I couldn't express. For example, it gets into how consumers versus producers. And basically, if you want to make millions, you have to satisfy millions. And if you understand the economy and economics and fiat currency, and you start to understand the difference between consumers and producers, when you are a producer, you get rewarded handsomely. And the more you produce, the better your reward is. And it's a great book.
Love it. That sounds super. It makes when you start seeing everybody is part consumer, part producer. We just usually it's 99%. Like for the masses, it's 99% consuming and 1% producing or whatever. You got to flip that drastically. What movie suggestion do you have for us?
Oh man, my go-to, my favorite movie of all time. I'm not a big movie guy, but it's my favorite movie of all time. Is Snatch.
I haven't. I feel like I watched that back in college. I have not seen that. The reason I ask this question to everybody is because I love movies, but I don't watch a ton of movies. So I just want to make sure that when it's time to watch a movie, which is like once a month, if I'm lucky, it's like, all right, let's get a really good freaking movie. And I've got my my watch list that I add to. But that's awesome. Yeah. Any other? We got a few minutes here. Any other like thoughts, advice, direction, things that I always think there's something that you came in the back of your mind to the podcast today, thinking about like, oh, maybe we'll talk about this that we haven't hit on yet.
Yeah, I think the biggest thing, and the reason I'm so big in the education, getting it out there, is again, I say bet on yourself a lot. That's kind of my social media thing. And what I mean by that is stop waiting, right? Like similar to you, when we were talking a little bit before the show, like I'm about to be 40 this year. I turned 40. And I try to tell people I'm statistically at the 50% mark of an adult male in the United States of America. Might change, might not. Who the hell knows? But the point is that's staring you in your face. And I try to live as much as I can intentionally every day, right? Doesn't mean every day is rainbow and sunshines. And what I tell people is stop thinking you have time. No one is going to start running the race for you. All you got to do is move forward. And I don't think people understand that enough. And it's a very, and I'm kind of jumping all over, but I think there's this preconceived notion out there that the game is rigged. And I agree, but not the way people think. I think the game is rigged in the fact that they convinced you to accept that you're only worth what you think you're worth. The minute you open your mind up to think bigger, I went from a teacher in a hard, urban school making $80K a year, raised by a single mother in an all minority neighborhood. So I'm a statistic outlier, to getting on a private jet to fly to Coeur d'Alene to rent your Cybertruck to meet with a billionaire in a few short years. All I did was shift my mindset. I don't know how I can make it realer than that.
And what were the assets or tools that helped shifting the mindset? Was there a big unlock or just like taking incremental steps and then
getting intentional about what we wanted, even though it didn't look exactly like this, just thinking like there's got to be another way, getting obsessive and getting in the arena. again, I'm going back to, I threw an event here last night at one of my clubs here in Manchester, New Hampshire. There were 75 RSVPs, 40 people showed up. 40 people made a conscious decision, 35 bailed, right? What are you doing? We all have the same 24 hours. Really track your time. Look how you're spending it. And I guarantee you got more time than you think. You're just making a lot of excuses.
Yeah. Awesome, Michael. Well, if people want to get in touch, and I should clarify, you mentioned coaching there, you do some investing and whatnot. What are the different ways that people can participate in Michael's journey? You got a podcast, you got investing opportunities, you've got coaching. What else?
Yeah, 100%. Just starting, Instagram following. I kind of focus on one platform. I'm building YouTube out now. Have a podcast on there as well, but they're both Michael Ketchen. So check me out on Instagram. Shoot me a message. Give me a follow. I love it. It is me who answers. So you shoot me a message. I'll definitely connect with you. We'll get something on the books, and we'll talk real estate. We'll talk life, and we'll go from there.
Awesome. Well, Michael, this was super fun. I appreciate your time, and I'm glad that Anthony helped our paths to cross. I'm going to check out these books that you recommended, but this was valuable, and I thank you.
Appreciate it, brother. Thank you.
Thank you so much for listening. My name is Chris Kiefer, and my mission is to champion the relentless pursuit of purpose. And what that means to me is to be an example, a champion, someone that is in the trenches, working and showing and winning and trying and failing in how to pursue a deeper and more meaningful life with the people that I love, with my kids, with my friends, with our family, and also just be a champion and example of entrepreneurship and following my passion and doing what I believe I'm called to on this earth. And so if that inspires you in some way, please share this episode. If you want, like, subscribe, share, whatever, do all the stuff. It means the world to me to get this message and get these guests that I have out there. And if you're interested in any of the book recommendations or looking up other episodes of the movie list, you can visit my website, chriskiefer.com, for all the details on the show. And also check out the Boolean review software, as well as the Boolean automation consulting company that I own for home service businesses. So thank you so much, and we'll see you on the next episode.